Hello, everyone, and welcome into CrushTheStreet.com. I got a returning guest on the line with me today. It's David Quintierri of the Money GPS. He's an author. He's got a very popular YouTube channel, and he really pulls back the curtain and unveils truth. Lots of great stuff. His explanation on geopolitics, central banking, and uncovering the truth. And we came here for the truth. And that's why he's on here today. David, thanks for coming on Crush the Street.
Thank you very much for having me on.
David, you put out some really interesting information. It was a few months ago, but it talked about the Rothschilds selling massive amounts of U.S. assets. And I'd love to start off this conversation with that, asking you, what the implications were, kind of what happened, what did they do, and what the implications were.
So I had done the video a little while back, and as soon as I found out about what the Rothschilds were up to, I figured this would be a good video. So essentially, the Rothschilds, they have many subsidiary companies. They've got their family, their dynasty all over the world. But in this case here, if I remember correctly, it was RIT, their company that had sold off a bunch of U.S. assets. And many people thought they're in the know, so they would obviously have this advanced warning of something happening. Now, there are several stocks that have risen since. I haven't been tracking it because the total value of what they sold is probably, such a small percentage compared to their total wealth. But it is very important to understand what they're doing. Now, they're also buying things at the same time. They're selling. They're doing all kinds of things. But that's all released in the SEC's 13F information that you can see publicly. It's not a secret to anybody. And a lot of individuals out there just aren't aware of that. So you can check out two websites I'll give you right away. Whale Wisdom is one that you can check out, and Holdings Channel. And there's many more, but these are the ones that I check all the time. And they basically take the 13Fs from the SEC and they make them public. The only thing that I find is that oftentimes they don't report it. So they somehow can get away with keeping it confidential. And, it's not just the Rothschilds that do that. I've shown that on my channel before, that they don't necessarily have to make it publicly available. So that could be the case for future events. We don't know in advance. And also you only find out every quarter at maximum. So you never really get the best idea.
So David, what are they buying? I know you had some implications, or you mentioned some of the things that they were selling, U.S. assets, and then buying other things. What were some of the other assets that they were selling? And then, what were they buying?
Off the top of my head, I can't remember exactly, but it was your typical household names, nothing special, nothing. When I looked through the list, it wasn't anything that was necessarily, something that would, strike my imagination at all. So, in terms of what they were buying or selling, I didn't see anything out of the ordinary, let's say. So when I was investigating it, I just figured it's important to note, and perhaps if something happens, we can say that, the Rothschilds knew before the peak came. They're always, just like any wise investor, they'd rather be early than too late. So that's what I think they were really doing. But as I said, this is such a small percentage compared to the total dynasty that they have. But I do think it's important to understand what the Rothschilds are doing, what Berkshire Hathaway is doing, what all the big businesses do on a regular basis. A lot of people don't understand that a company like Apple, they think of it as a company, but they also have holdings, and they do buy U.S. debt. They are buying other things as well. So when you see companies or families like this that are buying into something, we need to track that progress.
David, we've been tracking the demise of the U.S. economy, one of these central bank ran economies here for a while at Crush the Street, and I know you have done the same. But we've really seen this Trump bump. We've seen a lot of money come into the country now, as, for instance, the U.S. has become a more attractive place to do business. Billions of dollars are being repatriated. You mentioned Apple. Apple's doing the same. And in light of that, I for sure, we know that these debts can't be repaid and everything is so unsustainable, but is there anything that, what's your assessment now that, maybe the economy is doing better? And, has it changed any of your forecasts?
Not really, ultimately, because the central bank has the power and they will decide at what point to dry up the liquidity. They have started that with the quantitative tightening, QT policy, and that's the Federal Reserve. But other central banks like Japan have been doing a stealth taper as well. I look around the world and I look into history and I realize this keeps happening. It happened in 2007 and it's going to happen again at some point. It's whenever the central banks decide. They are beyond, as Alan Greenspan, no other entity, nobody else can tell them what to do, essentially, to paraphrase him. And this is the case today. The economy can do well, but the stock market can do poorly, or the other way around. They are completely disconnected. And although that's not natural, it shouldn't be this way, that's simply the way it's been working. Central banks, they increase liquidity or dry it up, and they decide when the stock market will crash. A lot of people will suggest that that's ridiculous because they wouldn't want it to crash. The Rothschilds wouldn't want it to crash, but I have a difference of opinion because with the crash, you can consolidate power and you can consolidate wealth as well. So they can buy things up for pennies on the dollar, just like they did in Greece, just like they're going to do all around the world.
Wow. Yeah, no, that's a good point. If you know when to short something, if you know when to go in and purchase things pennies on the dollar, I mean, that's a very powerful thing. That's how people get rich. And, they have the statistics of how many millionaires were made during the 1929 stock market crash, the Great Depression, that were birthed out of that. That's like the inspirational side of things. But more on the sinister side of things, if they are timing this market in such a way that they're going to profit, I mean, that is not very genuine. And it's market manipulation to the highest degree.
Of course, they run and control these markets. They've been doing it for hundreds, perhaps thousands of years. So we're not in any different of a scenario today. There's definitely been some positive things over the last little while, but those who control the money control everything. And that is an absolute fact. I'm not willing to believe that anything has changed in that regard yet. The money printers, I mean, they literally own the printing press, which I think is, as far as I'm concerned, it's everything.
David, so I'm very curious to ask you about Bitcoin because I know you really dig and look behind the scenes, and I'm not sure, what your thoughts are on that, in this environment where we're seeing Bitcoin trading the $6,000 range. Obviously, we saw the peak of Bitcoin, $20,000 Bitcoin happen right as the futures market started trading. I mean, really correlated almost to a T with that. So what are your thoughts on Bitcoin? Are you seeing manipulation? And, what's your thoughts on it? Where are we?
Well, I've been tracking the progress for several years. I found out about it initially from Max Kaiser in, I think it was, let's say 2011 at the latest. So I heard about it then, and I purposely ignored it. I thought to myself, this is ridiculous. I mean, who's the creator of this? It just sounds silly. So then over the years on my YouTube channel, I'm starting to hear it from my subscribers. Look into it, look into it, look into it. And I purposely avoided it. And then I watched one video on Bitcoin, and I was immediately sold on the idea, not necessarily Bitcoin, but on this idea. And I couldn't believe it, how foolish I was not to look into it earlier, because I'm investigating all these other things and I was being ignorant and avoiding Bitcoin. So today we saw the price, it hits $20,000. It's shocking everybody, but it came up a lot too fast. But if you look at it where it was at the beginning of 2017, it's still up significantly. So it has done very well compared to any asset, and it's going to be
Agreed,
volatile. Yeah, the market is smaller than many other things like the stock market, the bond market, and things. So you're going to have a lot more volatility, there's no doubt. The manipulation from external forces, I mean, it's possible. I haven't seen any specific elements to that. But I mean, with the market of a relatively small market, it's going to be easy to do so. What I would say is that the one trend that we have to watch out for is that the technology is advancing so fast, it's making all of the existing coins irrelevant. So for example, you have Bitcoin, right? It comes out, it's going to be the best thing ever. Then it splits off, you do a Bitcoin Cash. Now a Bitcoin Cash, it's faster, supposedly it's better for this and that. And then you have Ethereum comes out. But then on top of that, you have EOS. Okay, well, should I get Ethereum or should I get EOS? Should I get any of the number of ones that have come out ever since? And they're all supposedly better and faster than the previous one. And some of them are just ideas. Some of them are just .com type boom and bust things that we're seeing here. We don't have anything yet, but we have this really good idea. So give us a lot of money and we'll see how it goes. But I'm really concerned about new ones replacing old, and how are they ever going to find some sort of base to just say, okay, let's just stick with this one and let's put our money into it. Let's develop it. Because you're never going to get any real development if the money keeps changing from the newest to the newest.
Yeah, no, I think a lot of us are trying to scratch our heads about this. Is Bitcoin MySpace, and are we going to have some sort of Facebook come about and take it over? But I think, to some degree, you have the first mover advantage, you have the dominators in the sector. I mean, you have your Microsofts and your Apples type of businesses, these legacy companies that have such an advantage over the market. And I think that's one of the things that we have to look at when saying which one is going to be around, and, will some of these other ones be able to, rise up to some degree, but, will they really be able to overtake, the Microsofts and the Apples and, now the Amazons for that matter. Anything on that?
I agree. That's why you see the dominance of Bitcoin still, even though, it was the first one, and there have other ones that you can say are, have every advantage over Bitcoin. It's much faster, it's cheaper, things like this, but still around, and it still has that dominance. I haven't checked recently on the percentage, but it's been going anywhere between 30 and 50% for the longest time in terms of the whole market. So it's pretty big when you look at it. What I would say is that if the market really wants to use this as an alternative currency or as a primary currency even, we need to find some stability, and that's really where we're not seeing that in cryptos yet. But I think it's such a new technology. I still consider it to be in its infancy, and we've seen such, I would say, if you look at how many businesses have opened up around it, how many jobs have been created because of it, that's it's positive. I do think it's positive. I just think that at this point, there are way too many cryptos out there, and most of them will not exist in probably a 5 to 10 year timeline. And that's good, because that's the free market acting. It's going to wipe out the ones that are not needed, and it's going to be able to, keep the ones that are really good and strong and everything. That's a good sign.
Yeah, I think I read some statistic on Cointelegraph or one of these websites, and it said that they estimated that 80% of the ICOs in 2018 or 2017, I should say, were scams. And they used the word scam, and I'm going to assume they were being a little liberal with that term. But I mean, that is a very high statistic on really just people trying to strike when the iron is hot and make money. And there's good and bads to that, right? Because, money attracts talent, it attracts ideas, and, who knows how many brilliant ideas will really flourish over the next 5 to 10 years that were birthed in 2017 because of the attraction of possibly making a fortune in some of these cryptocurrencies. So I guess there's two sides to every coin on this thing, literally.
That's for sure.
David, let's chat about the true money for a second here. We've had a lot of distraction with cryptocurrencies, of course, with 2017, and gold really did not seem like the attractive place to be. And here we are, gold making brand new 52-week lows, I think today actually. And it's just very disheartening. And again, it goes back to, optimism, conventional optimism with the economy, conventional optimism with the stock market, sentiment really being high, and people are not thinking about a safe haven. They're not thinking about gold. The US dollar is their safe haven right now. What are your thoughts on this?
Well, generally, if you talk to people in the finance industry, they think of gold as a joke. They do not have a single penny of gold. If you go to the bank, when I started first investing in gold, I asked my bank if I could get some physical gold. And they said, well, sure, we can get any mutual funds for you. We can get stocks for you as well. I said, no, I want physical gold. And the person was looking at me like, I'm a ghost or something. I said, I want a coin. I want a bar. And we can't give that to you. I said, okay, give me my money. And I took my money and I went to Scotia Makata and I bought it there. And then I kept pulling money from that bank and kept buying gold, kept buying silver, because it's physical, it's real, and I can trust it. I can't trust your stock. I can't trust, your mutual fund. I don't know what's going on there. I want to physically hold on to something. So that's what I did. Now, the people in the finance industry are completely, and they're simply brainwashed into it, and to use your word, disheartened by what's been happening with gold, because we know that it should be at a higher level. We know it is an absolute fact that they are manipulating it. I forget who the individual was now, but I remember reading about it. They said, if you just trade gold based on the off hours, like you can figure out, you can actually determine what's going to happen in the off hours and make a profit from it, because the manipulation is so incredibly obvious. And that's a terrible thing when you know it's happening. GATA, they're the ones who have been doing great work releasing all that information. But I'd like to get to the core message. For me, precious metals has nothing to do with the price that we see. The price that we see there are talking about futures. They're talking about paper. When we talk about precious metals, it's physical. I'm not talking about mining stocks. I'm not talking about ETFs. I'm talking about the physical metal, and it is virtually priceless. If you look at cultures in the East, they are always giving each other gold coins or high carat jewelry as a means of transferring wealth from one family to another, keeping it within the family, or passing it down generation to generation. They are not giving each other paper money at weddings and different ceremonies. They're giving each other gold. They know what's going on, and they're the ones who buy more and more and more physical gold and silver. We are the ones who are thinking, oh, that's a silly thing. Maybe I can just trade it in my brokerage account and short it or something. They're thinking on it on a totally different level, and this is how you pass wealth generation to generation. You could do that with real estate. That is great. And you could also do that with precious metals. I don't think about the price at all. They're not thinking about the price. When they give a coin, they're just thinking, I'm passing wealth down. And that's the way it should be.
David, one of the things that we've been really just interested in covering here across the street is just the changing dynamics of how fast technology is moving, and really education when you think about it. And, I'm curious to ask you about this, because you're all about, internet education. And, you've been able to share incredible bits of information with your YouTube channel and books and things like that. So with how things are changing, the conventional legacy system of college, what are your thoughts on that? What is going to be relevant in 5 to 10 years? Things are just rapidly changing so fast. What are your thoughts on this?
Well, I don't want to be rude to anybody, but I'm just going to be honest. And if you go to school to learn a particular subject, whatever that is, anything from math to history to, you want to become a doctor or anything, if you're doing it for the money, because you're going to school because then you want to have a better job in the end, I think that that's probably not the way to go today. We're in 2018 right now, and there are fortunes being made by a lot of people out there, and they didn't go to school. We know that. Look at many of the individuals out there who are the most rich people are dropouts. Okay, but even if you don't look at that and just look at the average entrepreneur, they're not going to school for these topics. Doesn't necessarily mean that, you know, if you go to school, then you're going to be a failure or something. If you want to become a doctor, a surgeon, an engineer, things like this, you need to go to school, you need to work hard, you need to study, and then you are generally rewarded with a high-paying salary at the end. But if you're going to go for your bachelor's and you're going to go in school for 4 years, 3 years, things like this, I don't think it's sufficient to be able to provide people, number one, with any education that's of any use to anybody, but also to provide you a job at the end of it. With $1.5 trillion, if I'm remembering correctly, in student loans, we're looking at, you know, masses of people that are supposedly educated that can't do anything with it. They're working at generic jobs. I know many people that they've gone to school, they went to their university, spent 3-4 years there, and then they get out and they're working at a generic job that you need no education for, just because, you know, they're just going to be there temporarily, just for a year, and then I'm going to apply to this place and that place, and then 10 years comes by, and then, well, they don't want to quit now because they have 10 years of seniority in this place, and they don't want to leave. And this is the cycle that people get themselves into. Suddenly they realize, oops, I didn't even need to go to school, didn't need to waste all that time. Now, in terms of education itself, you know, as far as I'm concerned, it's a failure. We look around, and people are completely zombies. They don't know what the hell's going on, and they just believe everything they're told. You put anything in front of them, they're going to believe it, they're going to swallow it up. So that's really where the failure comes in. That's why it's important to seek out alternative information. The alternative is much better, although much of that is garbage anyway too, but at least we can get into some of the real truths where people aren't being paid by the advertising and things like this, where we know that, hey, we could speak our minds. Maybe it's, you know, a bias on one side or the other, but at least it's somebody's alternative view that's important. And I would just say that we need to be able to be reading all the time. So in school, they tell you to read these books and these textbooks, which are written by, you know, so-and-so's friend, but that's not the way we should do it. We should be looking into the information we desire, read the books. If you're not reading books all the time, then really you're falling behind. That's just the way it is. Information is picking up too fast. We can't keep up. So we need to at least be able to read some to try and learn from individuals out there. You know, YouTube is good as well. To have that always, just to constantly keep updated on the newest of new information. But overall, I would say education system is a failure.
Yeah, I totally agree. And then you have the whole problem with the fact that it's tied into the legacy system. It's tied into the pensions, and, you know, it's a perpetuating cycle where, you know, elementary school is geared for middle school, and then the middle school is geared for high school, and high school teachers are judged on how many students go into college. And, you know, if that system is failing, that's their goal. The goal is to put people through that failing system and not advance. And I don't know if they'll really be able to advance and get with the times. I mean, now internet gives people information essentially for free and fast, relevant, real-time information. And then when you throw in the fact that there's artificial intelligence and machines and computers are going to be able to be updated and learn information on a real-time basis, I mean, this changes everything. I mean, how can a human do that? You talked about how fast things are changing and reading and how important that is, but throw in the fact that a computer can update and infer and retain information instantaneously. I mean, you add the jobs problems, you add the economic problems. It's really a perfect storm waiting to happen. So I guess with that, David, please share some closing thoughts here. And again, thanks for coming on CrushTheStreet.com with me.
Definitely. So I would say that at this time right now, if you look statistically, it's the FANG plus stocks which have kept this market afloat. In fact, I'm just about to do a video. The fact that if you extract the FANG plus stocks from the S&P 500, it is actually in the negative. And we shouldn't be at this point where just a handful of stocks keep a market afloat. That's not a strong market. That is absolutely not a strong market. So what I would say is that more and more people are going the opposite way of diversification. They are actually selling off positions from other things, and they are buying up into the FANG Plus. And that is a big, big mistake. This happens every time at the top of any cycle. I'm not saying that this is necessarily the top of the cycle, but what I can see is that we're making the exact same mistake again. Now, if interest rates continue to rise, this is going to become a very big problem because all of that's interconnected in with interest rates, bank loans, and everything all the way down to the consumer level. This is worrisome for me. So we have this opportunity today, if you haven't done it before, to diversify, even within the asset class itself. And I typically will see this within the paper markets, obviously, with FANG stocks. That's pretty much all anyone's buying today. But even within precious metals, I would advise people to be diversified. So if you just have, for example, Maple Leafs, that's it. That's all I buy. I just buy Maple Leafs. I buy one a month, and that's all. Well, I mean, that's good, but I think what would be even better would be to try to get all different types of coin, bullion, get it some so-called junk or common coins, silver. That would be excellent. You can diversify all the way down, and I would highly recommend the smallest denominations as possible. So even within the asset class itself, diversify. You can diversify geographically as well. You can hold some of those metals in a different country. That's another way to diversify. So always be thinking of diversification way, way more than what your financial advisor would tell you, because that's kind of silly. They say diversify. We've got a mutual fund, and it's called Diversified, and we can offer that to you. That is not the case. So that would be my message today. It's in 2018. It's more important than ever. And so I'll just finish off with that. If you want to check me out, my YouTube channel is The Money GPS.
Well, we came here for the truth, David. Thanks for coming on, and I appreciate your time with us today.
All right. Thank you very much for having me on.